Welcome back to AlgoBot, the channel where we break down automated trading strategies for MetaTrader 5, one expert advisor at a time. I'm your host from AlgoBot, and today we're exploring a strategy called Volume Absorption Reversal. This is a mean reversion approach, one that studies the moments where a heavy surge of participation fails to move price, and then looks to fade that exhausted move. Over the next few minutes, you'll learn how it reads tick volume, an EMA value line, and the average true range together to find its setups. Let's walk through the idea, the code, and a visual example, step by step. So what exactly does the Volume Absorption Reversal Expert Advisor do? At its heart, this strategy is built on a classic market reading principle often described as effort versus result. The idea is simple to state. When a large amount of trading effort, measured here as a surge in tick volume, pushes price to a new extreme, but that effort fails to produce a lasting move, it suggests the dominant side is being absorbed by the other side of the market. When selling pressure gets absorbed at a fresh low, price often snaps back upward. When buying pressure gets absorbed at a fresh high, price often eases back down. This expert advisor is designed to study those moments and fade the exhausted move rather than chase it. Three independent tools work together here. The first is tick volume, which acts as the effort gauge. The second is an exponential moving average, or EMA, which serves as a slow value line, a reference for where price has recently been fairly priced. The third is the average true range, or ATR, which measures volatility and defines both how stretched price has become and how wide the protective stop should be. Because everything is expressed in terms of ATR, bar structure, and volume rather than fixed point values, the logic is time frame and instrument agnostic. In the source notes, the author suggests it is well suited to ranging currency majors, gold, or an index on time frames from 5 minutes up to 1 hour. In terms of temperament, this is a contrarian, patient approach. It deliberately trades against the immediate move, so it tends to appeal to traders who are comfortable waiting for a very specific combination of conditions rather than trading frequently. As always, this is educational information only, and trading carries real risk, including the risk of loss. Let's break down the exact logic the expert advisor follows. Everything is evaluated only on closed bars. The just completed bar becomes the bar the strategy evaluates, and every average and indicator value is built from the bars before it, so a level never gets to see itself. For a long setup, conditions must all line up. First, a fresh extreme. The just closed bar must print the lowest low of the last several completed bars, set by the swing bars parameter, which defaults to 8. This confirms there is a genuine downward move to study, not mid-range noise. Second, a surge of effort. That same bar's tick volume must be at least the VolSurgeMult multiple, by default 1.8 times, the average volume of the prior 20 bars. Real size has stepped in. Third, a failed result. Despite printing that new low, the bar must close in the upper portion of its own range. The close law parameter, defaulting to 0.6, means the close sits at least 60% of the way up the bar, leaving a long lower wick. The selling effort produced no lasting downward result. It was absorbed. Fourth, overextension. The new low must pierce at least 1 ATR below the EMA value line, so the strategy only fades moves that are already stretched far from value, where a snapback has room to develop. When all four align, the EA places a buy order. The short side is the exact mirror. A fresh high, a volume surge, a close in the lower portion of the range leaving a long upper wick, and a high stretched above the EMA. In that case, it places a sell order. Risk management is defined up front. The stop is structural. It sits just beyond the surge bar's extreme, by an ATR buffer set with SL buffer multiple, which defaults to 1/2 of an ATR. If the extreme is broken, the idea is invalidated and the position closes quickly. The take profit is placed at a fixed reward multiple of that initial risk, using reward multiple, which defaults to 2. So 2 units of reward for every 1 unit of risk. Finally, a break-even ratchet moves the stop to the entry price once the position gains 1 unit of risk in open profit. Only one position runs per magic number at a time. Let's look at the actual MQL5 code as it appears in MetaEditor. At the top are the input parameters you can adjust in the strategy tester. VolLoopback sets the volume baseline window, swing bars defines the fresh extreme window, and VolSurgeMult sets how large the volume surge must be relative to the average. Close lock controls how near the close must be to the far end of the bar. EMA period and ATR period define the value line and the volatility measure, and StretchMult sets how far beyond the EMA price must reach. SL buffer multiple, reward multiple, lots, and magic complete the list. Now the long block. The code first checks fresh low, whether the just closed bar's low is the lowest over the swing window. The if statement then requires three things together: that fresh low, a close location at or above close lock, and a low that sits below the EMA minus the stretch distance. When all are true, it reads the ask price as the entry, sets the stop a half ATR below the bar's low, computes the risk, and calls trade.buy with that stop and a take profit at the reward multiple of risk. The short block is the mirror image. It checks fresh high, requires the close to be in the lower part of the range, and requires the high to sit above the EMA plus the stretch. Then it reads the bid as the entry, places the stop a half ATR above the bar's high, and calls trade.sell with the matching stop and take profit. Both sides use the same structural stop and reward-based take profit. Let's bring this to life on the chart. On the main panel, you can see the price candles and a smooth blue line running through them. That's the EMA value line, the reference for where price has recently been fairly priced. Below the candles is a subpanel showing tick volume, with a dashed gold line marking the surge threshold. Whenever a volume bar pushes up into that gold zone, it means participation has jumped well above its recent average. Keep your eye on that panel, because it does a lot of the work in this strategy. We begin on the left with price drifting lower. The first few candles step down, each one closing a little beneath the last, and you can see price pulling away below the EMA value line. So far, volume is ordinary. The bars in the subpanel stay well under the gold threshold. This is just a steady decline, and on its own it gives the strategy nothing to act on. Then we reach the fifth candle, and everything changes at once. Price drops to a fresh low, the lowest point of the recent window, so the fresh extreme condition is satisfied. Look at the volume panel underneath. The bar leaps up into the gold surge zone, telling us a heavy surge of selling effort has just stepped in. But here's the key. Despite making that new low, the candle closes back up near the top of its own range, leaving a long lower wick. That's the failed result. The selling pushed hard but produced no lasting downside. And notice how far below the EMA value line that low has stretched. All four conditions are now aligned: a fresh low, a volume surge, a close back up in the range, and an overextended distance from value. On the very next candle, the expert advisor acts, and you can see the buy entry marker appear. The protective stop sits just below that surge low, marked by the stop loss label. If price breaks the extreme, the idea is wrong and the position closes cheaply. From there, watch how price behaves. The absorbed selling gives way, and the candles begin to climb, one after another, back up toward and through the value line. Because the take profit was set at twice the initial risk, price travels 2 units of reward for every one at risk, and reaches the take profit marker several candles later. The long idea has played out. Effort was absorbed, and price reverted. Now the market keeps pushing higher, and this sets up the mirror image. Price extends up and away from the value line again, and we arrive at the surge high candle. Once more the volume panel spikes into the gold zone, a surge of buying effort. Price prints a fresh high, the highest of the recent window, but this time the candle closes back down near the bottom of its range, leaving a long upper wick. The buying effort was absorbed, and the high has stretched well above the EMA value line. That satisfies the short conditions in full. On the next candle, the sell entry marker appears. This time the stop sits just above the surge high, shown by the stop loss label, and the take profit is placed below the entry at the same 2-to-1 reward multiple. Watch the candles roll over and step down, back toward the value line, until price reaches the lower take profit marker. The short idea has completed in the same way as the long: a surge of effort, a failure to follow through, and a reversion back toward fair value. So across both trades, the pattern is identical in shape and simply mirrored in direction. Volume tells you the effort, the candle's close tells you the result, the EMA tells you value, and the ATR tells you how stretch price is and how much to risk. That brings us to the end of our look at the Volume Absorption Reversal Expert Advisor. We covered the effort versus result idea behind it, the 4 conditions that define a setup, the way it reads tick volume, the EMA value line, and the ATR, and we walked through both a long and a short example on the chart. Remember, everything here is educational information only and not financial advice, a recommendation, or a solicitation to trade. Every strategy carries risk, and losses are a normal part of trading. If you found this breakdown helpful, please like the video, subscribe for more MetaTrader 5 strategy analyses, and leave a comment telling us which strategy you'd like us to examine next. You can find more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.